Good morning, guys. Welcome back to the channel. My name is Franco. This is welcome back to another pre-market analysis live stream. I'm gonna review the dollar, interest rates. We're gonna review what is happening in the VIX, crude oil, ES, and Q, and we're gonna stop a little bit and review Microsoft and Google. They are reporting this afternoon, so I wanted to pay attention to their charts, and we will use implied volatility to estimate the move for the earnings. Okay. All right. So without further ado, let's go right into the dollar. Oh, before I review the dollar, I want to check here on the news calendar. We do have real estate numbers coming up in the 7-minute. Then we have consumer confidence. I will be putting a alert for this one. It has 3 stars though. I'll be putting an alert here. Then later in the day we have the 2-year note auction. I know it's not this is not a report that usually has 2 stars. It's just because what is happening that the people is like the market is paying attention to this report coming out because of the yield curve, right? And the spread, the 10-year and 2-year spread is very important. So I want to pay attention to this too. But it's at 1 p.m. So we're pretty much done by that time. All right, so let's jump right into the dollar. Sideways. We've been here since basically this entire month. 3 weeks, sorry. We've been ranging in the dollar, okay? Actually, since September 23rd, we have been here. Now we expanded the range a little bit. Now we're chopping around this level. Now it's very hard for the dollar to continue to go up because it's already up around like between 15 or 17% for the year. So it's a shocking move for the dollar market, okay? Now, like I've said, BOJ and BOE are openly selling dollars to try to protect their currencies. My question is, for how long can they do it, and if it'll work for them? Okay. All right. So here's the dollar on the daily. Basically, chop on the bottom of the range. We do have this draw-based rally, but no follow-through to the upside. We basically are sitting here in this bottom of the range. So if we put the drawings and we go down to the lower time frame, on the 30-minute, you have this demand that was created on the 6th. We came back on the 17th. Now we closed last week and we opened up on Sunday right here. So at this point, I think this demand is overdue. Like is already used up. It's yet to see what is going to happen, but the most likely scenario for me, and I'm gonna put the 3 hours, so we can have more space right here. So at this time, what I'm looking for is this type of movement, right? A break to the downside and a comeback, so we can go lower. If we don't have this movement, what is a good setup for me, it'll be this one. Not getting to the blue line, coming back to this area, and then the breakout to the supply. Okay. This one is hard for it to happen in 1 day. This is a 3-hour chart. If we go to the 30-minute, we probably will have something like this. This is not impossible though. Okay. This is a likely scenario today. If this happens, the market will have more upside. Now, big earnings today and tomorrow and Thursday. So probably we can chop. We don't have any economic news that can work as a catalyst to either side. The market is already retracing 10% to the upside, and we are in the top of a range. We're gonna see that again. All right, so this is the scenario for the dollar. Regarding the interest rates, the yields are coming down. I don't say much, but we've been holding this area, so I do expect this to turn around. If this turns around today, then it'll influence the equity markets to the downside. Now I need to have the dollar reversal as well. If the dollar holds this demand, which is not very likely for me, but if it holds the demand along with the interest rate, that means a short for the equity markets. Now, all this, it depends on the morning all. Thank you. It all depends on the environment that we're in. Now, bond yields usually behave the other way around. When bond yields drop, the markets drop, right? But now in the current environment, the market is being very sensitive because of inflation. So right now, until it changes, we'll consider a bullish on the bond yield, bullish movement on the bond yield, so negative reaction to the market. Okay. Like I said, this is a blue line right here, is 4.15 approximately, 4.14, 1 basis point below. We can even just break this week and continue to the upside. If we happen to have a lower, if we happen to have just a drop on the bond yields, let's say we come here and it come back, but it's not very likely to happen in just one day. Okay. It's very hard to read this in the lower time frame. Something that I really haven't done pretty good, but I do have this formation right here. Okay. What time was this? 8:30. Yeah, and the market open. All right. So this is the demand for the bond yields right here. Okay. VIX, not much information about the VIX. Below 30 right now. Yesterday we gapped up, and with the upside, it totally collapsed to the downside. Now we are below 30. My demand is 28.70. Is not far. But it's very likely that after this move, we could have more continuation to the downside, right? If we break this demand, I mean. If you see here, the VIX behaves in a very particular way, right? It has a spike, come back, spike, it comes back, spike. So we're in this phase right now. If you figure, we are in this phase, right? So one likely scenario, if this demand works, here to the top again, and then a total collapse. And this could be the capitulation, like the bottom of the market. We don't know, right? But it's how it's been behaving for the last year. For this year, sorry. All right, this trend line is very notable. If you go to the weekly, we have been creating lower highs every time. Now, if we happen to break to the upside, like we did here during the pandemic and other times, like the 2009, recession, these levels are for sure the capitulation of the market, the bottom of the market. Okay. For now, there's no bottom or capitulation, right? Yeah, no problem, Edgars. I do review good trades, bad trades, all trades. I think it's part of the process for me. All right, let's continue on. Crude oil, just in a range between the demand and supply. If we break to the upside, then we'll have been created a pretty nice break and retest setup right here, a comeback for more upside. Now this level is not something that I will pay attention to right now. I'm looking for this thing to come back. If we bounce from here, then yes. All right, this bottom of these weeks are pretty nice supply for a continuation to the downside. This could take days, though. All right, regarding the ES, we're sideways, pretty narrow range on the overnight, not much, like 40 points probably, less than 40 points. I'm losing sensitivity. I see 40 points is 1% overall range, and I think it's too little. But it's not too little. It's too little for the environment that we're in, right? The ES managed to break this high from October the 5th. I think the Nasdaq has not yet. So the Nasdaq has a little bit more weakness in it. So I don't have any like high quality supply right here. And there's few reasons. That doesn't mean it's not gonna like retrace from here. It could. But in my rules, I just take fresh zones, right? There's nothing fresh right here. It's already been tested. Okay, freshness. The fresh zones is 38.55. But that doesn't mean that this cannot work to the downside. It just simply means that I will not be taking it. Why? Because the probability based on my trading strategy goes lower and lower every time we revisit the price level. Okay. So I have this one, nothing changed. Regarding yesterday, regarding yesterday's move, it was a bit choppy. I understand it moved to the upside, but not much. Like this was the open, and then after the open, we just stayed in this range. We closed here, close to the upper side of the range, and now the overnight is right here. Now, we don't have any catalyst, but this is the setup for me to take a breakout to the upside. Okay, I don't have any supply. My supply is right here. If we break now, I will not be taking this for the simple reason that we have earnings, and I do rather just wait for something to be created during the trading session. But if we have this breaking out to the upside, I think it'll be a good breakout, right? Up to 38.55. Now the dollar is setting up, the bond yields are dropping. It's yet to see what is going to happen here, okay? Regarding the demand, still 37.14. I think it's too far, but with earnings, is not impossible to get there. Yesterday, we did have some retest right here of this pivot, and we bounced back up. This was on the pre-market, and we tried to revisit this. We never broke the overnight. Like on the Nasdaq, we broke the overnight, and this was the 2 in the afternoon candle. Okay, so the real demand is this one. Already tested. Okay, for the ES. Let's go on the supply side because I want to see what is going on here. Yeah. This is closing. And this is the Fed meeting. This is the FOMC. The real supply is 3904, but during the FOMC meeting, this one was created on the, I guess, the lower time frame, because I had it there forever. Yes. 2:50, 2 in the afternoon. Yeah. So the Fed meeting was the Fed rates decision was this, and then this was the speech, and then after the speech, okay, this was created right here. So this level, we haven't reached it. We haven't gotten to this level yet. It's 38.32. The high is right here. So I'll pay attention to this level. If we come to this level, it's a fresh level right here. 38.32. It's a resistance point. It's not a supply. So the breakout is not valid though, because look at the profit potential. It's 21 to 32 is barely 10, 15 points. Okay. All right. So the NQ, similar scenario, a little bit more bullish today if you compare the daily. This one has a red candle, doji red candle. This one has a more like a bullish candle on the daily. Like I've said, this is the level from October 6th. Here's the ES. This is October 6th. So the ES has a more bullish case here. Okay. Same thing. My supply is still this one. I don't have anything here. It's already been tested by this. So this week coincided with this week from October 5th. So I don't consider this entire area as a supply anymore. Okay. This one is already tested. My fresh one is 11,805. Okay. That doesn't mean I won't be shorting. I will short if something is created during the trading session. Okay. All right. So this is the NQ. I think we have more upside here on the NQ, especially with earnings. In reality, I don't think earnings, and because we saw the bank's earnings, I don't think earnings will come in any way. It will come negative. Okay. That doesn't mean I have a crystal ball and I know what is going to happen. That's very dangerous. Okay. But I have a sense that the earnings are gonna come well, meaning that stocks might have a might have a good reaction of earnings. Okay. Just because I was watching banks reports, the banks earnings reports, and all of them coincide that consumer is still strong. Consumers still have savings, that there's a lot of purchasing power still from the consumer. Until the consumer is not hurt by inflation or interest rate and savings, I think earnings will continue to come positive, right? So I got Microsoft here. They report this afternoon, very important for the Nasdaq. This trend line is on the weekly. Okay. This trend line is on the weekly. We haven't going through it. Like we came here in August, but we rejected to the downside. Now trend lines is a very subjective thing, right? So if you have this one, 1, 2, 3 touches, let's see what happens in this one. Okay. This time, I guess. If you go to the daily, right? I found this supply. Now this supply is not within the range for the earning move. Sorry. This supply is within the range of the earning move, but it's too close. is too close for it to work. Like the demand is fine because the estimation for the movement on the earnings is and let's do it. We can calculate it together. Okay, for those who trade options, the way to calculate the move that I do is you go to the option chain, right? And you can do a straddle trade on the stock like Microsoft, right? If you, let's say you come here, this is Microsoft, you control buy and control buy, right? The estimated move, right? And they tell you here as well. They tell you here what's the estimated move is $13, right? And this is one standard deviation, 68%, right? And you have it here, 13.3. So if you translate that to 13.3 here, right? We have to wait for it to close today, or at least like almost at closing, right? So you can place the trade. Either you're buying options or you're doing any type of trading in Microsoft, right? 13 points, it'll be right here. That's why I say this supply might not work. But this is the only one that I have. The other one is right here. Closing this gap. It's too far. Might be this one. If we have some upside in Microsoft. Stack says I see 11,500, 11,530 holding resistance. If we break that, I see upside for sure. Yeah, I think it's a lot. There's a lot of bullishness in the market, right? So it's about 5%. So to the downside, I think this demand will work pretty nicely because it's even farther than the estimated move, unless we have a disastrous, like we have a tragedy in the earnings report, which I don't think so, but anything can happen. This demand can be blown. But look, other than that, if we have a drop here, I think this demand can hold pretty nicely based on statistics, right? Based on statistics. If we have a black swan event, any of these zones can be blown at any time. Here's the deal with Microsoft. So we're just opening right here. Last earnings report was right here. So this is last earnings report right here. So is it a coincidence that we are gonna report earnings right here, and after the report we had some more upside? We probably are gonna come here to this level and drop. Okay, so I wouldn't be surprised. I think Microsoft have limited downside because we have this demand. But I think the bearish case is a lot better in Microsoft than the bullish case. Okay, that's just reading the chart. Google does have a very bullish case. The same trend line in Google is this one, right? We are breaking it to the upside. That means that Google might have some more upside right here, right? The retest, it'll be this one, but yesterday we revisit that retest. If we have some more upside from earnings, a comeback to this level is not something crazy. Like we break this, few more days, and then a continuation to the upside. So this chart tells me that the market probably still have some room to the 800s, right? Or even more, who knows? If we do the same exercise with Google right here, we go to the option chain. Right now price is 102.50. So we go to this one, 103. And we go control ask and control ask. There we go. It's 550. So it's an estimation of 6% for the movement right here. So 107. You have 107 to the upside. Right? 5, right? And to the downside, the demand as well. If we happen to drop, this demand is still in play. 96.44 is a good demand. Is further than the estimated move for Google. Now, same scenario than Microsoft here. It's just on the top of the supply. So I don't think the supply will work. Some more upside from these earnings. Let's see what happens, right? Earnings reports are very hard to predict. So I don't try to put a trade right before earnings, right? But after earnings is good to place bets, okay? All right, so that's gonna be it for me today. I'll see you guys in 10 minutes for the for the live stream, okay? See you guys. Thank you.